We're looking at 16 basis points higher on the 30-year, 13 basis points right now on the 10-year, and really the volatility in between that has gotten us there has become kind of the norm over the last year.
Well, good afternoon, Romaine. Good to be with you. You're right. Now, 10 basis point days in the Treasury market seem to be, a snooze. It happens all the time. And what's interesting about today's move is that really it's a little bit of a mirror image in part from what we saw last week. Where last week we saw a refunding announcement that kind of positively surprised. We saw a Fed that was interpreted as being dovish, and that helped to really drive yields lower. We sit here today, and of course, you get an auction that was very poorly received, big tail, so very weak demand. And you saw Powell trying to, I think, offset some of the interpretation of that more dovish press conference from last week with some hawkish statements saying not sure they're done and certainly ready to tighten if, in fact, they need to. So you get a little bit of reversal here in rates. At the end of the day, we kind of think fair value is around 4 3/4 on the 10-year. We're a bit below that right now. But we think we'll be range bound for the next 3 to 6 months until kind of the trajectory of the economy and inflation becomes a bit more clear.
Well, then what do you make then? I mean, there's been a lot of discussion today about term premiums and about the yield that folks are going to demand, particularly for new issues. And we saw that, of course, with the 30-year auction today here. What is the threshold that you look at here that where you do think investors will get more comfortable taking on Treasury supply?
Yeah, I think what we're going to need to see is a little bit more evidence that the slowing in the economy is, in fact, going to continue. So one employment report, which took the labor market from red hot to just solid, is not enough for that. So we're going to need to see some follow through on the employment market where jobs maybe are below 150,000 per month. That takes some of the pressure off of wages. And we're going to need to continue to see inflation data that is moving in the direction of the Fed. It's going to be a much slower move down from here over the next 12 months than what we saw over the last 12 months. But investors are going to have to get more confident in those fundamental factors in order to get comfortable taking down longer end supply in that 4.5% to 5% range.